Hey guys, Akil Stokes here. Welcome back to another episode of the Weekend Trading Edge video. My apologies for being gone for the last few weeks, but life has taken over. A lot of dad stuff to do, a lot of travel as well, but I wanted to come back and give you a video this week and kind of keep this video as consistent as possible, even when my schedule gets busy. Speaking of busy, we had a very busy week in the markets this past week. We had a surprise rate hike by the ECB, which was really a good thing for the markets, right? The markets have been kind of stuck in this late summer funk, and typically what we've been seeing throughout the entirety of the year has been really movement off of fundamental news events, fundamental reactions, and then retracements and corrections right afterwards, which doesn't really help us as traders. This was the first time in a while that we actually saw some follow through in the market. And what it did was it pushed the market to some pretty interesting positions, giving us some awesome trading opportunities. Now, this week we have our Fed interest rate decision as well. Be interesting to see what happens after the surprise hike last week. So we may be in store for some of the same. But going back to the technical side, I want to start here on the dollar yen, and this has been a pair we've been watching for a while now. So some of this may be a reminder for you, right? Especially for you guys that have, you're with me in the live room every day or whatnot. But dollar yen, we're still looking for a potential move higher. However, the opportunity to move higher or not is really going to depend on the time frame and what you're looking at, right? So if you're brand new, I have a very simple process in my trading called IPDE: identify, predict, decide, execute. I want to identify what price is doing, where price is at. That allows me to make the prediction about what is likely to happen next. And then I want to decide how to get involved and then finally pull the trigger. And this 4-step process is all rules based. So if I see a certain thing on the chart, or if a certain level is broken, I can make this prediction. If a certain level is not broken, I can't make that prediction, right? That keeps us in kind of that rules-based discretion where we have the freedom to kind of analyze the market with our eyes, but we're still working within rules. That way we maintain our consistency. And we're going to get two different setups here on the dollar yen, depending on if your higher time frame, right? The time frame in which you're identifying on is the daily or a lower one. But just to put things in perspective, these two green lines are the same predictions as before of where we think the dollar yen is likely to go, right? We've been looking for moves higher since way back at like 145s, and the ending point is about 148 mid, 149 even, to where I'm comfortable shooting for highs at. So we've had a really good run, but there's still a little bit more meat on the bone. Now, here's the difference, right? On the daily here, if you look at our most recent structure high right here, we have held it, right? This is a retest of structure, previous structure resistance. We have held it. We have not broken and closed. Because I do not identify a higher high, higher close, I cannot make a prediction higher. And this is kind of like, if you can imagine the whole thing being a flow chart. I did a little YouTube short or a little Instagram, TikTok, one of those videos on this as well. So go back on social media and check it out if you haven't seen it already. But we want to analyze or we want to set up our trading plan like a flow chart where there's different boxes. And once we check one box, it opens up kind of a path to the next box. And we check that box and it opens up the path to the next box until we get to the point where we can actually take a trade. If one box isn't checked, that new path never opens up and we can't take the trade. So for me on this, my higher time frame is personally the daily. Because we don't have a higher high, higher close on the daily, that never opens up the path to me looking for my pullback trade. So this is a no trade for me until that level is broken or violated, I should say. So I have to wait a little bit longer for that. However, if you're someone that operates in a lower time frame, let's say you're someone that uses the 4-hour chart as your higher time frame, and maybe you do your active trading off the 4-hour or the hourly, it's going to be a different story. Because here we do have a higher high, higher close, right? This is how you can see where two different traders could be looking at the same kind of chart, but have two different approaches to it, and that's okay. But unlike the daily chart, which held, here on the 4-hour chart, we have a higher high, higher close. This candle right here broke and closed, violated this previous level of resistance, right? So I check that box off. That opens up a new path to a bullish continuation trade where we can look for one of two things. We can look for a breakout and just trade the breakout. We've already had candles after that, so you don't want to really do that. Or look for the pullback, meaning for the market to pull back into our previous level of structure before the next extension forward. And there's two things here, right? We don't really have a strong breakout at all, a very weak one, I would say, right? Typically with good breakouts, they break out pretty legitly, right? They don't look back. But what's interesting here is the previous candle, right? We break out, we put in a test. This is our retracement right here. It just happens to come on a single candle. We put in a retracement, and then we end up in the upper third of this candle, making this it's a weak bearish candle, but I would even look at it as a bullish candle, even though it's red. Again, not paying attention to the literal open and close, but just the formation, the story that this candle is telling me. And then the next candle to end the week is an inside bar, which is consolidation. This rejection is a positive sign, right? You can see it happen on the other side right here. This rejection is a positive sign that price is likely to continue higher, right? The bears tried to make a run and retrace this, and the bulls were strong enough to fight them back. Would have been better if we saw a higher high, higher close after this, but it's not always going to be a perfect world. But this would be an opportunity where I would be looking for longs in this area, again, up to our 148.4, up to our 148.8 levels. If you go down one more time frame lower to the hourly, you can even see more of a consolidation here, right? We come up, we run into we have some false breakouts and whatnot here, which is, depending on if you value those or not, could be something else that X's out your trade. But you can see that we try to retreat down, bears get rejected, and then we basically put in a tight consolidation after that right at the high. So keep an eye for a bullish breakout trade. Again, you could be aggressive. There's many ways you can get involved in it. You can be aggressive. You can wait for another confirmation in the form of a violation. But as far as your 4-hour chart goes, this looks like a good opportunity to buy it up and try to catch that extension to the next level higher. Next up, we're going to head back to the Euro Aussie. Kept our notes on here for the live room. If you guys remember, we're looking for two main levels, right? We have a big kill zone here for our bigger red box. I'll go and change the colors of the other one to make it clear. But a big kill zone, which was our kind of initial level that we identified in the market. And then what we did was, after we identified that initial level, we did some analysis and we tried to pinpoint more specific levels in which price can go to. And that's the form of my analysis, guys. I start with a really big picture, a really big concept, hypothesis idea. Sorry, it's been a really long weekend. I'm running on E, and it's just 9 o'clock in the morning on Sunday, and I'm already on E. We start with a bigger idea, and then when we add our different tools of analysis, what we do is we break that idea so it gets smaller and smaller and smaller, and really start pinpointing areas in the chart, whether it's areas to take the trade or areas to take profit for the trade. It's kind of the analysis type that I do. So this bigger zone was kind of the bigger analysis. Hey, we're likely to continue from this violation of structure down to here. Then we asked ourselves, where in this level would we likely to go to? Our first target level was right here at the first orange box. Our second level was at the lower one. So you can see the first part of this trade is already completed. We've already made our way down to and beyond this first level. Now the question is, all right, well, that trade is done, but the next short opportunity still could continue down to this 164.10, 164 even level. And what we would need is a pullback. You can see price action extended down into another high volume level where we're tracing back up into the void. This is the area where we're starting to look for a pullback trade. Now, the ideal place that I would think this would go to, you never know until it actually happens, is right back to our previous level of structure support, which should now act as resistance, right? Back to the end of our void where our volume starts to pick up. And then look for an extension back down, at first retesting the previous lows right here, and then maybe the extension down to that 64 even handle later. Now again, could this pullback happen before? Yes, right? So what we want to do is we want to identify a zone of where it could happen. And then again, as we get more information in the market, we can use more of our tools to perform more analysis and really pinpoint an opportunity on where we want to get involved. And we also want to look for clues in the market, whether it be clues like an RSI going, giving us hidden divergence, or maybe an RSI going overbought, or a specific candlestick formation that forms, right? Once price action is in our interest zone, this is where we want to watch on a bar by bar basis for those clues. Once we get those clues, then we know, hey, this thing may be ready to roll, and then we want to wait for our execution order, and then boom, pull the trigger and take advantage of it. So looking for continued shorts here on the Euro Aussie down to 164 even. Nice little secondary chance on a pullback trade. Bearish pullback trade. Next, we're going to be here on the pound Aussie. This is going to be a very similar situation, right? You can see price has violated this blue line right here, a previous level of structure resistance, and we started consolidating to end the week. What we want to do is we want to ask ourselves, where is the next place that price is likely to go? And right, just from a structural perspective, the next place that I see is going to be this level of structure right down here. It looks to be below, 91 even, right about 91 30s. Is 91 even here, right? 91 even handle right in this level. I don't know how this is going to work out, but let's take a Fibonacci extension and see if we get any confluence down there. Swing high to swing low and back up. Zoom out a little bit. You'll see there's a 127 extension right in here as well. And I don't think we're going to have an AB equals CD, but I'm actually looking at this for the first time. I think we already hit that, achieved that. Yep, so that one was our AB equals CD. Let's see if we have another one right here. Swing high to swing low. Copy and paste. Let's just drag this on. Ooh, look at that. AB equals CD pattern right down there as well. So looking at this from a CTS perspective, which is a combined technical score, that's a way that we take the different elements and the tools and techniques that we use to analyze the market. So harmonic moves, Fibonacci's, volume, even handle numbers, right? Whatever you want to throw in that box, like a big old thing of gumbo, right? You can kind of make it what you want, but you want to be consistent with it, and then you want to assign these different elements a point value, right? So it's a quantitative way of adding up your trade. So that way a CTS score of 7 is a better trade than a CTS score of 3, or a CTS score of 14 is a grade A trade, while a CTS score of 8 is it's a decent opportunity, but not the best. Let me just do one more thing because I'm curious here. I'm nerdy on the charts. Fibonacci retracement, swing low to swing high. You wouldn't get anything here? 786 right in there as well, so a little bit more confluence. So we're looking at Fibonacci confluence. We're looking at AB equals CD pattern, even handled number. I have no idea what our volume looks like in this area, but I can bring that on. But similar, right? Volume, high volume spike right after the void as well. So similar to our Euro Aussie, a little bit different situation, but looking for a move from here down to here. Now, because this is consolidation, right, we may get one of two things, right? There is the chance that we can get the pullback back into previous structure and a chance to trade it down. That would offer more profit opportunity, which would be a good thing. Probably have to be a little bit more patient as we have to wait for that pullback to happen first. Or it looks like we're forming a triangle pattern here, a little wedge pattern. Yep, look at that little wedge pattern here on the hourly. Right? This is consolidation. This is a potential breakout pattern. Again, we have our bias, right? In general, patterns like this, right, are a neutral pattern. So in general, meaning like all else being equal, we never know if this is going to break out to the upside or the downside. There's no statistical probability. If you guys go back and listen to the Trading Coach podcast episode I did the other day called Are Markets Random? It was episode 886 or 866, excuse me. There's a really good conversation about that. But you want to be careful with randomness in the market because a lot of us think things have an edge where they don't actually have an edge. Where you build your edge from this is saying, okay, this is a random setup, but what makes it less random is the analysis that I do beforehand. So what is the overall market direction? Where are we at relative to structure? Those are the clues that tilt it in one way or the other. And again, that's why we follow that process. IPDE, identify, predict. We do all of that bias stuff first. That way, by the time we get to the thing, whatever the thing may be, we can tell whether this thing is more likely to do this or more likely to do that. Another way to wait, or another thing to do, is to wait for confirmation. So instead of just trying to be aggressive and trade a breakout, just wait until it breaks, right? If this thing breaks out and breaks our trend line, then you know we're more likely to go down to the downside. If this thing breaks our trend line up here, then you know we're likely to go more to the upside, right? So, you can have patience and wait for confirmation. It's not going to take away too much of your profit. I know everyone wants to be in the trade right away, but trust me, have patience. It's going to save you a little bit of money. Sometimes it's going to bite you. Sometimes the market's going to break out and never come back. Whoop-de-doo. That's trading, right? In that case, you're not in the trade, but you don't lose trade, so it's still a win. But you can look for a breakout here. If you are someone that wants to get involved aggressively, meaning you have that bearish bias, what this also gives you is a nice little structure shelf right here, right? So this shelf right here where we found resistance, spiked down, came up, found resistance again, this is going to be a nice area where you can place your stop loss at, right? So if you're doing something where, let's just say you get involved right here at market, right? You have a very nice level to place your stop loss above this. You have a nice even handle number as well, 193 even to place your stops above. And again, you know that you're looking for, 91s to the downside. So you can easily set up a really good risk reward here, even if you're aggressive. So it's a good situation here on pound Aussie. One of my favorites, and that's why I included it in the video. Now, speaking of favorites, right? If this is one of your favorite videos to watch each and every week, do me a favor, show me some love. Just do a few simple things. One, hit that like button, right? Nice, simple, right in the right-hand corner. Takes a second to do. Two, leave me a comment. It could be a comment saying, hey, Akil, loved the video. It could be a question, right? I've been doing these shorts on social media, taking your questions and doing like little 1 minute or less videos addressing them. That way we can get all your questions asked. You don't have to wait an entire week for it. And also share this wherever you're active at on social media, whether it's Twitter or X, whether it's Instagram, TikTok, whatever it may be. Just give it a little share. Help me spread the word about what we're doing here, because we're still, right, been doing it for years and years and years now, 11 years, still trying to shift the mindset of traders, especially newer traders, and get them on the right path of thinking about the markets in the right way and giving them a realistic look at what it takes and what it means to be a consistently profitable trader. That way they don't fall victim to the scammy junk that's out there. So if you can do those three things, like, comment, share, subscribe if you're not already, that helps me out massively. All right, last thing we're going to check out is a massive advanced pattern formation. Not so massive if I go to a higher time frame here, but we're looking at gold, right? Gold. We have a potential cipher pattern forming. I'm going to measure this in. This is an advanced pattern formation, right? We're going to look at a swing high to swing low being our X to A. This is our starting move. This first retracement is going to be our A to B. Then we have an extension down here, which is going to be our B to C. Very nice hold at this level, by the way. And we're looking for a continuation up to our 786. And if we can continue to our 786, this offers a good area to look for sells as an advanced pattern formation, retesting our previous structure highs up here. This can also form a head and shoulders, right? We're kind of halfway through this pattern formation right now, or maybe 3/4 way through. But if we look at this, and it's not your traditional looking head and shoulders, or not your traditional location for head and shoulders, right? And there's also the failed one the other way. But we can look at our left shoulder right here, a move down for our head. Right now, we're retesting our neckline, which would be right here. We would then anticipate a right shoulder. Usually it's symmetrical, not all the time, but usually it's somewhat symmetrical, right? And then the confirmation for our head and shoulders would be a violation of our neckline, which typically takes us up. Now, the cool thing about this is you can look for both, right? Maybe price action breaks out that head and shoulders. Maybe you decide, hey, I'm going to sell it right at that cipher pattern. Boom. I'm going to sell it down to here, right? That's where targets are going to be for the cipher, around that area. Oops, sorry, wrong tool. Bang, right around here. Sell it for the cipher, maybe even a target 2 here. This is also your pullback for the head and shoulders for you to ride it back up. So plenty of things you can do with this, but potential cipher was the main thing I wanted to talk to you about here on gold. Head and shoulders was just kind of something that popped up while I was recording the video. So hope you guys enjoy. Remember, hit that like button, subscribe if you're new. Make sure you check out the Trading Coach podcast. Got some cool new episodes coming for you this week. It's available on your favorite podcasting app 3 days a week. Check it out. And until next time, plan your trade, trade your plan. Take care.